Hey, what's up trader? So in the today's tutorial I have simplified price action trading to suit both the novice and the pro traders. Actually, so you have to watch this video up to the end to gain the content of today, because if you skip any part of this video, then this video won't be important to you. Okay, so let's dive straight into the video. So this is the content breakdown of what I'm going to talk about today. So first, what is price action? That's the definition of price action. Then the second, we have to be looking at the SAEE formulae. The third one, we shall be looking some examples in the charts. Then last, a recap of what I have taught you today. Okay, so what's price action trading? So price action trading, this is simply analyzing the charts and trading the forex market without use of any indicators or the fucking smart money concepts. This is just pure price action. You just concentrate on the charts and read what the price is doing at the now moment, or what the price has been doing in the last week or in the previous day, and so according with the time frame that you will be using. So I came up with this formula SAEE formula that really simplified this price action trading. So S stands for structure, the market structure of what the price actually is telling you at that moment, and A is the area of value before you enter any trade, so you concentrate on the area of value. E standing for the entry triggers, that valid entry triggers that the charts are showing you at that time, and E standing for exits, stop losses, how to put on the stop loss when you have executed your trade. So I am going to break them down fully to make you understand. Okay, so the market structure. So the market structure will always move in a series of lower lows or in a series of lower highs to form a downward trend, and in a series of higher highs and higher lows to form an upward trend. But what if the market is just going sideways? So we call that a sideways trend. The market is just consolidating and going not in any particular direction, but just in the sideways. The price is stuck in the box. So that's what we call the price is stuck in the box, and it's not going in any particular direction. As for me, I avoid the consolidations and I only trade the trending markets. Okay, so just a recap of the market structure. An upward trend. An upward trend will move in a series of higher highs and higher lows, and a downward trend will move in a series of lower lows and lower highs. But a sideways trend, the price is stuck in the box. It is in a consolidation, going in not in no particular direction. It's just stuck in a box going nowhere. Okay, so let's break down what the A means. So the A means the area of value. So this is an example of area of values that you must familiarize yourself with. So the first area of value that is common to every trader, that is support and resistance. So okay, at support, this is where the potential buyers gonna come into the market and move the price up. But at the area of resistance, this is where the potential sellers gonna come into the market and push the price down. So the second area of value being the moving average, when the price retraces the moving average, giving you some multiple confluences to tell you that actually the price is respecting this moving average. So that gives you a valid area of value. So the third area of value that you must familiarize yourself with is the trend line. So actually, if the price is respecting the trend line that you have drawn, that's a valid area. And so another area of value that you must familiarize yourself with, these are the flip zones. Okay, so flip zones may look like this. I will show you in the examples when we shall be tackling the live charts. I will show you there. But now the flip zone actually the theory behind flip zone is that at the beginning the price may form an area of resistance, then it breaks that resistance, then it comes back to retrace that area of resistance. Now if it comes to retrace that area of resistance, okay, so if it comes to retrace that area of resistance, it may give you a valid entry trigger. Entry trigger, so these are the entry triggers, the common entry triggers that you must familiarize yourself with. So after the price has shown you that actually this is the area of value, you must familiarize yourself with the entry triggers to make you enter or execute any trade. So these are the common entry triggers. So the first common entry trigger, this is in the bullish market, this is the hammer. That's the first entry trigger in the bullish market, being the hammer. So the second one being the bullish engulfing, the third one being the morning star. So actually that is just the candlestick patterns. So the entry triggers in the bearish market, this is the shooting star. We have bearish engulfing candlestick pattern. We have the evening star. Actually the opposite of evening star, the opposite of the morning star, the evening star in the bearish market. Okay, so those are the valid entry triggers that you must familiarize yourself with to make your life in forex trading. So the last part of SAE formula is the exits. So when you have executed the trades, you would like to exit when the price respects your setup or goes against your setup. So if it respects your setup, you would like to take profit. You exit when you are right, and when it goes against you, you would like to exit when you are wrong. So exiting when you are wrong. So exiting when you are wrong is so important because it prevents you from losing a lot of money from your trading account. Actually, this is a part of risk management tips that you must familiarize yourself with. So if it comes to exiting when you are wrong, we normally use stop losses, fiscal stop losses. So you would like to put the stop loss at the area where the price would invalidate your trading setup. So that's the area you can put your stop loss. And you can also put your stop loss depending with the relative strength of the market using the RSI indicator. Actually, I normally use the RSI indicator. It works so perfect to me that I don't have to be stopped so early when the trade is still running. So that is it. Okay, so let's look into the live examples, into the charts. so that you can understand better what I have just been talking about. Okay, so let's break down the SAEE formulae. So let's begin with this chart of British pound against the Japanese yen. Actually, I am going to give you 3 seconds to identify this market structure. So 3 seconds, 1, 2, 3. So ever say the market is in a bullish trend, then that trader is really right. Okay, so let's break down the SAEE formula. So let's begin with the S. Actually, the market is in the bullish structure, is in an upward trend. So as a trader, you should only be looking to buy. You should only be looking to buy. So we have identified the A. So we go to the area of value. So the area of value, we can go with the moving average or trend lines. So let's begin the trend lines. Actually, have already selected that trend line. Can begin with this one here, this trend line, trying to have at least three touches for this area of value to be valid. So let me try to make it so to have at least many touches. Let me try to pull it up to this end. Okay, so there's a 15-minute chart. So let me try to zoom in. Okay, so traders, this is the area of value I have identified. So you can check it out. So this is the area of value. Let me just zoom in. So what traders? So after identifying this area of value, so you can only look to enter when there are valid entry triggers. So if this price retraces this trend line, that is why you will be looking to enter. So let's, for example, the price reaches and touches our trend line like this. So you will be in position to identify the entry triggers that I have told you. The bullish hammer, we have the bullish engulfing candlestick, we have the morning star. So those are the entry triggers you'll be looking in this market structure. So, and what about the exits? So the exits, you'll only be putting your stop loss at the area that invalidates your trading setup. So let's, for example, say the price comes and touches your trend line. Yeah, so let me use this horizontal line. So if it touches here, the area that can invalidate your trading setup is this place. Let me move it here. It is this place here. It is here. So if price comes and goes down, beyond this place, then it will have invalidated your trading setup. Or you can also use the relative strength index, the RSI, to put on your exits. So this is the recap of what we have just been learning since the beginning of this video. So the first recap that I have to break down is the SAEE formulae. So A standing for the market structure, the A standing for the area of value, E standing for the entry triggers, and E standing for the exits. And the exits, I say you put your stop loss at the area that invalidates your trading setup. So you exit when you are wrong, and exiting when you are right. You also put your take profit at the next area of value. So I really appreciate you guys for staying tuned up to this moment. I really appreciate you. Much love to you guys. So you can just go and like my video, share and subscribe to your friends, at least to make me feel motivated to be uploading more videos like these. Thank you guys. Nice day.